The Cal FHA Dream Program, where clients were getting 20% up to 20% down payment for free as a grant, is gone as fast as it came. This was an unbelievable program for those that were able to take advantage of it. There was up to $350 million of funds available, and it was literally gone within weeks. But here's what I actually wanted to talk about, which was the conversations that came from that whole program coming out. Was what I've noticed is there are a lot more people talking about home ownership that weren't a month ago before this program came out. So in this video, what I want to do is talk about, yes, the Cal Dream program is gone, even though it might come back. I'll touch maybe a little bit of that at the end of this, but home ownership is not as hard as everybody might think. It might be closer for you than you might be thinking. So in this video, what I'm going to do is I'm going to cover two different options that you have as a home buyer, whether it's your first time or if you've actually done this in the past and you already own a home, maybe you bought one years ago, you can use first-time home buyer loans again. As long as you haven't bought a house in the last 3 years, you actually might be eligible for this. Okay, so let's dive right into this. But first, if you do not know who I am, my name is Christian Stubbs. I'm a co-founder, team leader here at the SB Luxury Group. We help people like you every single day get into your home, whether you're buying, selling, investing, or financing, whatever it is, we're here to help. Go over to our YouTube channel that is all about Orange County, but you can also head over to ocmarketupdates.com, register for the newsletter, and you'll get this in your inbox every single Friday. So let's dive into the two different types of loans that we're going to cover here. I'm going to go in a little bit of detail. So if you're not a numbers person, I'm going to try to make this as simple as possible. So number one is probably the most popular all time, is a 5% down conventional loan. Now, what does this mean? Well, it's pretty self-explanatory in the sense if it's a 5% down payment on the purchase price. So let's give an example of you're a first-time home buyer and you're buying a $750,000 home. Well, that means you would have to put only 5% down payment in order to qualify for assume you qualify for the loan, but you could put as little as 5% down. That would mean you'd be putting about $37,000 as your down payment on the property. So if you have that money sitting in a savings account or a checking account or wherever it might be, maybe it's invested in something else, and you're thinking, gosh, that's really all the money you need to be able to own a home. Yes, you can get into a house for as little as 5% down payment, and there are lower options as well too. This just happens to be the most popular. So that money is your down payment. Well, what are the other costs associated with buying a home? You do have closing cost, which is up to it's usually about 2% of the purchase price is kind of a safe number to guess on. So if you're buying a home that's $750,000, you're going to have that $37,500 for down payment. You're going to have another $15,000 in closing costs. So for all in just over $50,000, you can get a really nice home for $750,000. So here's another point. This is a huge tip, and I do not see nearly enough people take advantage of this, but you can actually ask the seller, you can negotiate this if you have a good agent, for the seller to pay your closing costs, or at least a portion of them, or even more. So what this means is your 2% closing cost, that $15,000, you can actually go to the seller and say, hey, we would love to buy your home. We'll offer you maybe $750,000 for the home, maybe $760,000 for the house, but we want $15,000 back towards our closing costs so we don't have to bring as much cash to the table. Now to the seller, this is a negotiation point on price, but regardless, this can save a ton of money for you as the home buyer if you're not looking to come with a ton of cash out of pocket. I can tell you for me personally, when I bought my first property at 24, I absolutely wanted to go down with a 10% down payment option. And when I did the math, the payment difference between 5 and 10% was so little, I figured I'd keep that money in my pocket so that I could go with a 5% down payment and use that other 5% towards other investments. So this is one of the most popular options, and getting credits towards your closing costs from the seller is absolutely possible in a lot of different scenarios. So make sure if you're out in the home buying process, you're talking about this. But if hearing this makes you think that maybe you're a little bit closer to actually buying a home than you thought you were, I would definitely advise reaching out to a local expert and figuring out, hey, how much do I really need to be able to do financially to buy a home? So that's number one. It's the 5% down conventional loan, most popular low down payment first-time home buyer option. It's what I did personally. I'll probably do it again when I buy my next home, because you can go 3 years and all of a sudden you're a first-time home buyer again as far as these rules work. Okay, let's move to the number 2, which is probably going to become the new most popular option. This is a 3.5% FHA loan. Now, one thing I'll mention on both of these is they're both a 30-year fixed mortgage. You're just a different down payment term. So with an FHA, it's the Federal Housing Administration. Their whole reason they exist is to make home ownership easier for consumers, because the government wants people to own homes. It's good for the economy, but it's really good for you, the individual buying the property, in building long-term wealth. So 3.5% down payment is a lower number than the 5% down before. So you're going to have to come with less money actually to the table. Now, one thing to always mention, if you're putting less than 20% down payment, you've probably heard of this thing called private mortgage insurance or just mortgage insurance. And this is something you're going to have added to your monthly payment. In my opinion, the time it would take to say, if you have 5% down now, the time it would take to save all the way up to 20% would probably take quite some time, as opposed to just paying a couple $100s more a month in order to buy that property much sooner. Between tax benefits, appreciation, and all kinds of other benefits of owning a home, I would much rather buy that property early, pay that mortgage insurance, and then get it off once your home comes to a higher loan to value, which we'll get in a whole nother video. I don't want to go off on a tangent on that. So here's my point with your FHA loans. The really, really nice thing here is it opens the door to more potential home buyers. If you have maybe a little bit lower credit score or some maybe unfortunate things that have happened in the past as far as your credit goes, you can probably still qualify for an FHA loan. The guidelines are a lot more forgiving than the conventional loans are. And recently, there was a change that FHA rates are much better than conventional loans, even if you don't have the best credit. So it's definitely something you're going to want to ask your lender is, what is the difference between a conventional versus an FHA loan, and which one makes the most sense for you? But either one of these options lets you get into a $750,000 home for right about or less than $50,000 of cash, total cash out of your pocket. And then all you have to do is qualify and be comfortable with the payment. Now, I'm using $750,000 as the base price, but you can also do this up to a $1.1 million house. I'm struggling with 1.1 because it's really more like your loan limit to do a 5% down loan. The loan cannot go over $1,083,000 here in Orange County, and it's a little bit lower if you're outside of Orange County. But that means you can buy a house that's $1.1 million and only put 5% down. So if homeownership feels really far away, I would definitely encourage getting more comfortable with these different loan products. And if you aren't comfortable with them, reach out, send me an email, send me a DM. I'd be more than happy to go through what your different options are so that you can plan for the future. Because back to the original point of this whole video is I'm having a lot of conversations with people because of the Cal Dream, where they thought they had to have 20% down payment in order to buy a home. And they thought, gosh, I missed it. I missed the boat. I should have acted quicker, but I'll just wait until I have 20% down. And it's like, well, hold on a minute here. You have so many different options to become a homeowner, to get an enormous amount of appreciation over the next 5, 10, 20 years, pay off that mortgage, get your tax benefits as well too. So I just wanted to make sure that if you have somebody that, maybe I'm not speaking to you, if you know somebody that needs to hear this information, make sure you send this email over to them. Or if you're watching on YouTube, make sure they go over to ocmarketupdates.com and register for our newsletter, because we send tips like this out every single Friday. Also, I shared only one of several different tips that we use to save our clients a lot of money. So if you would like to see the top 5 tips that we use to save our clients money in another video, go ahead and comment or reply. Let me know that you'd want to see that, and I'd be more than happy to put it together. And again, thank you for watching. If this is your first video, make sure you head over to YouTube and subscribe. And if you're not getting this in your email inbox every Friday, head over to ocmarketupdates.com, and we'll see you next week.